guys may or may not know, I use three indicators that I use over on the daily chart, and I use the 50-day moving average, the 200-day moving average, and the 13 EMA. Now, why the 13 EMA? The 13 EMA is what I call the flexible trend line. You guys know I absolutely love trading with trend lines, and trend lines are going to be one of the easiest ways to know if a stock is considered bullish or bearish. It's one of the best ways to know if you should be holding onto a play or not. Right? I've been showing you a lot of this example from yesterday. We have bullishness, we have bearishness. We have bullishness, we have bearishness. I mean, hey, today I traded a trend line over on UPS, right? UPS. This was a great stock for us earlier today because we were checking out this play and trading it based off of its trend line. Remember, UPS had a nice uptrend, and the moment that that trend line cracked, we went and we shorted it, and we made money as the stock fell on down. When a stock is above its trend line, it's considered bullish. And when a stock is underneath its trend line, it's considered bearish. So the 13 EMA indicator is going to allow us to understand what is currently bullish and what is currently bearish. And the 13 EMA is going to be this green line right here. Okay? So let's get rid of everything except for that green line. So we'll go to indicators, we'll go to edit, we'll get rid of the 50-day moving average. We'll get rid of the 200-day moving average. And we'll just leave the 13 EMA and our volume at the bottom. Now, why is this important to us? Because how I want you guys to start thinking about this and how I want you guys to start using the 13 EMA is basically it tells us when we can swing trade a play. And I'm just picking UPS because UPS has been a stock that I traded earlier today. But what the 13 EMA does is it's always going to tell us which way we should be swing trading a stock. When a stock is above its trend line, right? We know there's a better chance for it to be able to continue to move on up, right? I just showed you that awesome picture where we say to ourselves, all right, hey, and I'll actually bring up many pictures right here, where we say to ourselves, as long as the stock is above its trend line, it's considered bullish. And when it's underneath its trend line, it's bearish. So when it's above, expect it to rise. When it's below, expect it to drop. Above, rise, below, drop. Holding above, dropping, right? Long traders, short traders, buyers, sellers. You could see how you make money going up, and you would have to short it to make money going down. So the thing is about a trend line, it's like a piece of wood. It's perfectly, straight. You can't bend it, right? It's like a plank of wood right here. You can lay it out, and that's all it is. Well, a 13 EMA is going to be our flexible trend line. So how can we trade this when we take a look over on UPS? Well, if I wanted to, let's say I want to say, all right, UPS, I want to swing trade this stock, which means I want to buy it and hold it for, let's say, 2, 3, 4 days, maybe a week or so. How do I know that this is a good area to hold this play? If you want to hold a stock for a week or so, one of the most important things is to, of course, watch the 13 EMA. What did we just learn out of our trend lines? Anything is above it is bullish. Anything below it is bearish. So let me ask you guys this. Would you ever want to swing trade a stock hoping it goes up when you are underneath the 13 EMA? No, not at all. You always want to do that when, again, the 13 EMA is bullish. So let's say you went and you said, all right, hey, I want to go ahead and I want to buy UPS right here. Well, that's not a bad idea because as you can see, we are above the 13 EMA. And guess what collectively happens over the next, week or so? You can see we consistently keep climbing and consistently keep on moving and consistently keep on moving. And we test the 13 EMA. But guess what? We're still above the 13 EMA. We're still above. You can keep holding. You can keep holding. You can keep holding until what? Until eventually we crack underneath it. And when we crack underneath it, now you can short it. And you can short it. And you can short it. And you can short it until what? Until we break back above it. And when you get back above it, now again, you go long above it, right? You be holding it on the buy side, the long side, and you keep holding, keep holding, keep holding, keep holding until it starts cracking underneath it again. So notice again what we can really do here. Now we can really start getting a visual and we can really start getting an understanding about why we use the 13 EMA. And it works great on a lot of plays. Now, there's going to be times, of course, where things may be a little bit more choppy. But let's just look at, again, some popular blue chips. And let's just say to ourselves, all right, hey, would this be a good play or a bad play to hold on the 13 EMA? For example, right here, let's take a look at Tesla. Ladies and gentlemen, if I wanted to get involved with Tesla, one of the most popular plays in the entire stock market, what could I do? Well, if I bought, let's say, Tesla right here. I buy Tesla right there, okay, right at this mark. And I say to myself, all right, when should I get out of Tesla? Well, the answer is whenever it goes underneath the 13 EMA. if Tesla doesn't go underneath the 13 EMA, technically there is no reason to get out of it because it's still considered bullish. It's above the 13 EMA. But I know those red days scare us. Those pullbacks scare us. But if I buy in at this price right here, guess what? We have a green day, we have a red day, we have another red day, but we're still holding the 13 EMA. And we have another red day and another red day, and then green, green, red, and then green, 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 then green, green, then green, red, green, green, and look where we get all the way up to. And the thing is, I don't need to get scared out by these red candles right here. I don't need to get scared out by these strong pullbacks. Until we fall underneath this line right here, I'm not selling. So that's why I love the 13 EMA, because it's going to tell me when I can be going long and when I can be going short. So let's figure out right now, today. Right now, today, at this moment, is it better to be long on Tesla or is it better to be short on Tesla? Well, collectively, at this moment, you can see every time we have hit this 13 EMA line, we have been rejected, right? So I just want you guys to see, we get rejected right here. We've been rejected right here. We've been rejected right here. And we are, again, still getting rejected right here. So at this point, I don't see a reason on why traders would be long on this play. We are still bearish underneath the 13 EMA line. So it's a very cool indicator, and it's a great indicator to be able to figure out when you should be going long or when you guys should be going short. Let's go with another one. We looked at a couple blue chips. Let's talk about some of the most popular micro cap plays, smaller stocks. And even though that these are maybe getting a little bit bigger, let's talk about those meme plays, right? I'm just trying to think of stocks that everyone is familiar with. Let's see what AMC looks like. Let's see what GME looks like. Okay, so if we take a look over on AMC, you want to go ahead and get involved with this play? What can we tell recently? Well, if just by, again, first glance, I can tell, looking at the 13 EMA, that it's been holding up pretty strong here. Look what's been happening if we just kind of go through the past. Look at this. It's just been bearish and bearish and bearish and bearish and bearish. There is no reason right now to be holding on to AMC on the long side because the past, 1, 2, 3 months, it has technically been underneath that 13 EMA line, right? It's been underneath that 13 EMA line. And when the stock first started spiking, when this, rip and run started happening, let's just move this over, way over here, guess what happened? The stock was bullish and no reason to sell, no reason to sell, no reason to sell, perfect bounce right here, no reason to sell, no reason to sell, no reason to sell. Okay, it's time to get out. Look at this, team. Imagine not getting scared out. Imagine not getting scared out when you have a red candle right here. Imagine not getting scared out when you have a red candle right here and actually getting out when the 13 EMA cracks. And when the 13 EMA cracks, you can always go ahead and start shorting these plays. And look how this, until it starts breaking back on up. So this line right here, this indicator is simply enough just going to show us and is going to help us understand, should we be long or should we be short? And this is going to make sure that we never go against the grain. Because when we go against the grain, that's usually when we end up losing the most. If I, again, want to start buying when everyone else is shorting, I usually end up losing. When I'm shorting when everyone else is buying, that's usually when you end up losing. So take this indicator, one of my favorite indicators, guys, and you use it over in your stock trading. Stock trading is going to absolutely change because you're always going with the momentum and you have a better chance now of winning than you do losing. 13 EMA, one of my go-to indicators. Enjoy it. Make that money.